Nikki, today shares in the London Stock Exchange dropped by quite a lot to do with these new capital requirements for clearers. Why is this?
Well, they were down almost 10% at the outset, though they've come back a bit since then. It's all part of this effort to try and make the financial industry a little more secure in the wake of the 2008 crash. One of the ideas, and it's been around for a long time, is that over-the-counter derivatives, that's sort of contracts that were traditionally negotiated bank to bank, should be cleared centrally. That makes them more transparent and regulators have a better idea of what's going on. Now that's a good thing for exchanges and for clearing houses in particular. It's a boost to volumes. But as part of this, there are new rules for the capital which clearing houses have to hold. And that has an impact on the London Stock Exchange, partly because it has a direct interest already in a small Italian clearer, but also because it's trying to buy a 60% or a stake of up to 60% in what used to be called the London Clearing House, but is now LCH ClearNet. On Thursday evening, the European Regulatory Agency, the European Securities and Markets Authority, put out detailed rules, and they are very detailed, about this new regime. And very quickly afterwards, LCH ClearNet said that it would need another 300 to 375 million in regulatory capital as a result, and LSE assuming its 60% stake in LCH finally gets regulatory approval, we'll obviously have to fund part of this. So it's a long explanation to rather simple share price drop.
So it's sort of an indirect impact.
That's right.
Really.
Yeah.
And then how is this money going to be raised? I mean, are they going to have to renegotiate the deal with ClearNet, or are ClearNet going to have to raise this? I mean, how are they going to get that capital?
There's been some speculation in the market this morning that might be possible. Personally, I think it's highly unlikely. In broad terms, everyone could see that this was going to happen. The LSE LCH deal was done many months ago. It's close to getting over the final regulatory hurdles. And the LSE has some balance sheet flexibility, so I think it's more likely that perhaps they will fund it on a debt basis. LCH itself could perhaps run its business more efficiently, and that would create some scope for cash flow to help out.
Okay, but overall, in the long term, I mean, this is a good development, surely.
Yes, absolutely. And the LSE is now nicely exposed to the increase in clearing business.
Right, okay. So in the short term, there's a bit of pain there for LSE, but in the long term, this is probably going to be a gain for the industry. Thanks, Nikki.